Hi, thanks for joining me. If your company or business is involved in bringing goods into the country, then the importing system is going to form a fundamental cornerstone of your overall supply chain. Before we can use the importing system, we're going to need to do some setup, not just in the importing system, but also, as we'll see, in other areas of the system. But first, let's just go into importing itself. From here, we'll select maintenance, and as with all systems, the first area that we would set up would be our parameters. I'd suggest the answers to the first two questions here everyone should have set to full integration. You definitely want your importing system to update your creditors or accounts payable system, and likewise you want that integration into the general ledger as well. I'd also suggest the must enter order box here should be ticked. That's simply to ensure that you can't enter things like a commercial invoice into the system without actually relating that to a purchase order that's been raised through the system. Also, whether we're paying tax on purchases or not, we probably wouldn't. And here, the tax on purchases really relates to additional on-costs in terms of distribution. And although I'm saying we don't really want to pay tax on purchases, you'd normally have that box checked and set it up with the tax code of GST free. The next question, or next group of questions we have here, in terms of packets for ComInv, and ComInv is our commercial invoice process. If you've been involved with importing, even if you only do this as a manual exercise, you'll be familiar with the concept of a packet. When you have a shipment coming into the country, that shipment may be comprised of a single invoice from a single supplier, or it could be that you have multiple containers coming in on the same vessel, and within each container there could be goods from many different suppliers. The costing packet is used to accumulate costs associated with either getting product to the dock or airport, or however the could be a freight distribution hub if you're in a situation where you can actually drive across borders. And certainly once the entire shipment is put together and containerized, there are going to be costs associated with moving those containers from point A to point W, being your warehouse receiving area. And that's going to cover things like freight, handling charges, insurances, taxes, tariffs, and so forth. But the question in terms of commercial invoices is, do you get costs that may vary and need to be apportioned and form part of the overall cost of receiving products, the landed unit cost, if you will, based on individual commercial invoices? For example, if you're getting goods out of China, do you need to pay for trucking from an internal manufacturing plant to, say, a port in Shanghai, or do you get your goods free on board? The answer to that question will dictate whether you would tick this box to say, yes, I want to accumulate these costing packets or on costs to individual invoices as distinct for the shipment as a whole, because as we said, the shipment as a whole, there are definitely going to be costs associated with that, which we would collect in one of these importing packets. But if you have a situation where you do need to apportion costs across product that's coming in on individual commercial invoices, you would check this box. Otherwise, leave it blank, and that's what I'm going to do in this case. You'd also nominate who your normal tax and tariff creditor is. If you're doing your own clearances and so forth, this would typically be the ATO. If you're using a freight forwarding company or a freight handling company of some sort, you would nominate their creditors code here. That code has already been set up in the accounts payable system or the creditors system. In this case, I have mine set up to use a freight forwarding company, Owens International. The percentage markup for tax calculations. If you're involved in retail operations and you're directly importing for retail, it could be that you need to actually pay or calculate your tax not just on the raw cost of the item, but an assumed markup may be applied to those and this is an across-the-board type markup, in which case that would be then used as the basis for your cost. If you've been advised that you are impacted by that, you would enter the percentage here. If what I just talked about sounds like gobbledygook as far as you're concerned, do as I've done, set it at 0, and don't worry about entering a figure up here. Likewise, if you're paying duty or tariffs on items, when you're calculating your tax, do you calculate the tax before or after those duties are applied? And once more, there'll be rulings that impact you, that either your freight forwarding company and or your internal expert, if you're doing your own clearances, will know whether you need to tick that box or not. The next box is whether you wish to produce a general ledger posting summary whenever you're doing updates through the importing system. I'd suggest you check this box. The journals themselves you're generally not necessarily going to look at, but it simply means that that PDF that you can view later will show you details of the general ledger entries that were made on a particular commercial invoice or shipment, or whatever the actual transaction is that you're doing the updates for. Of course, that information is available directly out of the general ledger through things like source inquiries and so forth, but it just means if you get a hard copy of the journal, you can see what the general ledger implications were as well. The next question is what date do we use for updating? Once more, I would suggest that most people would have this set to their receipt date, because you obviously want to recognise things on the day you got them, as opposed to 2 or 3 months earlier, or 2 or 3 weeks earlier, maybe 6 hours earlier if it came across from air freight. But that's simply the recognition date for entries that are going to be used or generated in the system. Stock in transit account will be used in the system for situations where you actually have a commercial invoice from your suppliers, and if you're watching this video, I assume that the terms like commercial invoices are not foreign to you. But when goods are actually in transit from the supplier across water, through air, on trucks, crossing borders, whatever, you need to potentially value that stock, and certainly if you've had to pay your supplier beforehand, before you actually have the goods in your hand, this general ledger account will simply be used to carry forward that estimated asset that you're going to receive once the goods actually arrive. So there isn't much to set up in terms of parameters for the importing system, but it's obviously important to get it right. So I'll just save that. We'll exit out of here. The other thing, we talked briefly before about packet numbers. These are used to accumulate costs to be spread over either individual commercial invoices or a shipment as a whole. And you'll notice there's 4 boxes down here. Now these costs, as you get on costs coming in, can be spread on the basis of a number of things. Starting from the bottom, a dollar spread. If you were paying insurance costs for your goods, which you probably do, if you wanted to apportion those costs across all the products in a shipment, you would probably do so on the basis of their dollar value, because the higher the dollar value, that is what you're actually paying your premium on. You also have the option of spreading costs based on the number of units. For example, if you did have to pay for internal shipping, once more from China, from say Xi'an through to Shanghai, you may have been charged a packing charge to physically move the goods off the truck into a container, in which case the number of items involved may be a valid way of spreading costs for that invoice. And I emphasize that invoice because by the time you're finished, a packet could have costs accumulated here from different suppliers for different things that are going to be spread by different methods, and that's okay. The other method that could be used to spread costs could be based on volume. Shipping sea freight here or truck freight can be a classic case here, where it's typically worked out based on cubic meters in terms of the shipment size and so forth itself, as opposed to say air freight, where although a cubic equivalent may be important, the physical weight of items could be forming the basis for cost allocation and so forth. So you'll definitely need to have at least one packet per shipment set up, because it's most unlikely your suppliers are going to pay all the costs for you. Um, and once more, if you cast your mind back to those parameters, if you have ticked the box to say you want to have packets for individual commercial invoices, be aware that even though you may need that occasionally, you will need to have one packet per commercial invoice every time. Like if that box is ticked, it means that every commercial invoice coming through is going to have a packet associated with it. Now, it could be for 95% of the invoices that you get coming through, those packets have zero values associated with them. So it's really done for that 5% that do. So that's your costing packets. And once more, if you're familiar with other importing systems, or if you've done this sort of stuff manually, that concept hopefully is going to be quite obvious to you. And if you need to, you can print these details out and so forth at any time, just with the print button, or as with everywhere else within the Visage system, you could also just right click on that table, say you wanted to export the data and put it out into Excel or something similar. So we've seen that before, we won't worry about that. The other thing that we need to do to set up as part of the importing process is to actually set up our vessels, our voyage numbers, flight numbers, or whatever. This is simply when a shipment is actually coming through, it's normally given a voyage number or a vessel or some designation for the actual shipment itself. So this is really just recording what that designation is, a description, which may be just the arrival date, although you'll notice we record the expected arrival date separately as well. And if you have things like a typhoon in the South China Sea, so your boats are going to be held up for a couple of days or a couple of weeks, if they're involved in looking for lost airplanes or something similar, then you'd simply come in, change the expected arrival date for the shipment, and that will have a flow-through effect in terms of the commercial invoices and so forth for when we expect to receive those goods, without you doing anything more than just updating the expected arrival date. So that's all we need to do in terms of setup for the importing system itself. But as I said, there are other things that need to be set up in other areas of the system, because the importing system touches many other areas. When we're importing, we're bringing goods in from suppliers, so there is some special setup that needs to be done in the accounts payable system, and a crossover in maintenance for our suppliers themselves. And this setup isn't too onerous, don't get too concerned. But if I had an overseas supplier, and I happen to have one called Mr. Overseas, and I'll just fix up my spelling mistake, Mr. Overseas Supplier, I'll just save that. If we have an overseas supplier, the way that that is designated or recorded really and significantly on the system, we keep their address details and so forth the same as someone who's local. But the most important thing is in terms of payment method. When the person was originally set up, we nominated their payment method as being an overseas payment, and we also indicated the currency associated with this particular supplier. So in this case, we have someone in the United States. They're obviously going to want to get paid in US dollars. If you have multinational suppliers where you're dealing with a single organisation, but sometimes you might be bringing stuff in from the United States and you're paying in US dollars, you might be bringing some other stuff in from Spain and there you're paying in euros or something similar. Each of those individual branches, divisions that you're dealing with that has a different currency you're paying for goods with, each of those would need to have its own unique supplier code and its own unique currency associated with it. And just showing you how you set this payment method up, you'll notice the field, once you've set a supplier up as being overseas and with a currency associated with it, you can't actually change it. So it's important at the setup that you do get that correct. If you do happen to stuff things up, give us a call and we can work some magic behind the scenes, but generally we don't allow you to change that. So when you're setting up an account in the first place, normally for your local people are going to be paid by cash, well, petty cash and so forth, possibly check. Most people are going to be a automatic payment transfer, but if we selected an overseas payment, we get this other currency selection box, and we just select the currencies themselves. And while we're talking about currencies, that is something else that you would have had to have maintained in the system. Now the maintenance for these, if we just look at our US dollars, it's really just a code. I'd suggest you use the international 2 or 3 character currency indicators, USD for United States dollars and so forth. The current exchange rate, I think the exchange rate today might have gone up to about 96.21 or something similar, so I'll just record today's exchange rate. Watch what happens when I move off this field. I'll just use the tab button, and you'll see that up here in this table it's automatically added today's date and my exchange rate. And you'll see there's actually a history of a number of different exchange rates that have been in place here. And you'll see also that that's a tab that says spot rates. The idea here is every time you're actually doing something with a foreign currency, be it receiving goods or paying a supplier or something similar, you may as well record that spot rate. And indeed, many people that are involved with importing actively will get their foreign exchange rates on a daily basis. Someone in the organisation, the first job of the day is they simply call the currency or currencies up, put their exchange rate in, and that's it. End of deal in terms of what they needed to do to set the spot rates individually. If you don't change it, that's fine. You can come back and update it as needed. You can also, if you happen to have missed a date, for example, there may have been a significant date in terms of transactions on, say, the 1st of May here, 2 years ago. Hopefully I'd know about it a little bit sooner than that, but we can just come to the table, insert a date, put in the 1st of May, and of course I need to nominate 1st of May in 2012, or I can just put in 12. You know the rules in terms of entering dates are very flexible there, and the exchange rate then might have been let's say something like that. So you can fix these up historically. You also will notice another tab over here which isn't updated automatically with the spot rates, and that's a order entry pricing date. That's simply setting an historic rate that you may use as the basis for calculating costs and or selling prices within the order entry system. In other words, when you're actually selling these goods. Up to you as to whether you use that capability or not, because whilst your individual spot rates may be more volatile as you physically are paying suppliers on a daily basis, receiving containers in, maybe not daily, but certainly you would be getting a number in a month, and no, it could be. Some of our people literally do get multiple containers in from overseas every day. So that's really just a function of what your volatility is there. The other things that are set up on the foreign exchange or the currencies is a realised gain or loss account. Realised foreign exchange gain is where you purchase something for, say, $1,000 US. You estimated the Australian dollar value was going to be, say, $1,200. You may not have paid that for 2 months. There's been movement in the currency, and during that intervening period, this unrealised gain or loss, at the end of each of those months, you would revalue your liability because you owe these people money in their currency in US dollars. So if at the end of the first month the Australian dollar equivalent had actually dropped down to $1,100, then you have made an unrealised profit. Now, it's unrealised because you haven't actually paid the supplier yet, but the exchange rate has moved. You may lock that in with a foreign exchange contract, which we'll look at later, but it's really a case of, as there are currency fluctuations going on, as you have these movements in the currency, you may have these book profit or losses, as opposed to a realised gain or loss, which comes about when you bring things in, assuming one exchange rate, you end up paying the supplier at a different exchange rate, that variation in costs is taken up as either a realised or actual gain or loss on the foreign exchange transaction itself. So that's the currencies that you would set up and then associate with your suppliers. The other area of the system that would be impacted and need to be set up in advance would be your inventory system, and here in particular on the products themselves. I've modified some of my existing products. So on the products, the critical thing here, I suppose, in terms of costing and selling would be you can optionally record a currency that you normally purchase this product in and what your foreign exchange cost is. The forex cost really just being, in this case, United States dollars and how many. And the other thing that you would enter up and record against your products is a tariff code. Now you don't have to, but as you'll see, if you do, the system can calculate your tariffs and so forth for you. And even if you're using a third-party logistics company, having the system generate or calculate, cross-check their working out in terms of tariffs and so forth can be extremely useful for you. And we've had clients who have literally saved tens of thousands of dollars in extreme instances where their customs clearance agencies have used the wrong tariff code, calculated the wrong amounts out. And that can be quite disastrous. Now it's up to you as to whether you use the actual tariff numbers. If we just come and search here, so you can enter in the real tariff numbers associated with the products if you like, or you can simply simplify things down as I've done here. If we've got a 3% tariff associated with this, I've just got a code of 3. End of story. I suppose it comes back down to how likely there are going to be changes to those tariff percentages and so forth down the track. So there are benefits associated with using the actual tariff numbers and updating them, but if there are movements, you've then got to come and update multiple tariff codes. So that's our products set up. So we've set up our suppliers, we have overseas suppliers, we've set up our products now, so we at least have an overseas cost and a tariff code. Now I need to point out you don't need to enter that information in if you don't want to, in terms of the tariff codes. It is legitimate to not have anything in there. It just means that one of the processes that we'll look at later on, in terms of the tariffs, you will have to enter the figures up every time yourself, using the documentation that you've either calculated yourself manually if you're doing your own clearances, in which case it really does make sense to have the tariff codes entered against the products guys, save you a lot of work. And or if you are using a third-party freight forwarding or clearance service organisation for you, having the tariff codes against the products will act as a cross-check. If you don't have anything, you'll just accept what their figures are, but you will need to enter in each of those figures. Now the other thing that's important and necessary in terms of our importing, and certainly because I've checked a box on the parameters that said must enter order number, and if you've looked at some of the other videos, and in particular the one about purchase orders, you may have seen me make an obscure reference to the fact that there were some difficulties associated with raising purchase orders against overseas suppliers. And if you haven't seen that video, I'd suggest you have a look at it after this, and the reason being I'm going to show you what the difficulty is, or the complication of entering purchase orders up against overseas suppliers. So we'd go to purchase orders, transactions, we'd go to orders and simply enter the order up, and if you've watched those other videos you'll immediately see what the difference is. My supplier that I'm placing my order for is going to be my overseas supplier, and did you see what the difference is? It happened just then. It's come up, and because I've entered an overseas supplier, it's told me what my currency is that this supplier is in. It's US dollars, that's the current exchange rate. If I nominate a domestic supplier, that information doesn't appear. So by simply nominating an overseas supplier, system tells me, hey, it's an overseas supplier. On the top of this screen and every other screen where we're entering stuff in, the system will tell me, hey, everything you're doing now is in US dollars. because this supplier was flagged on his supplier master file as being in US dollars. That's the complication, guys. Right? People that aren't involved in importing won't see this video and won't know there is no complication, because entering the order up is exactly the same for a domestic or an international supplier. More or less. The difference is, once more, when I come to actually order product, and we might order this RF product, it's not going to be against a job. We're going to order 200 of those. The system will come and look up standard pricing associated with this supplier. It assumes that we're getting it at that price, 28.23, and because this is importing, notice our currency up the top here, we're talking about $28.23 in US dollars. If we're talking to our Spanish supplier who deals in euro, we'd have EURs up here showing as our currency, and whatever we enter down here would be euros. And of course we can have multiple products on here, so we might go and get some of these SF products coming through. Once more, we're not going to do anything to a job. We might be ordering 100 of those, and the pricing, we might have negotiated a special deal here, and we might have got those for $80. That's it. Similar thing in terms of services. If we're buying services in, and services may actually be freight that we're paying for, or subcontract type stuff. But that's the exercise for entering up an overseas order. Hit save. The process is exactly the same for an overseas order as it is for a domestic order. Just enter the order up. The only trick is the fact that all of the figures that you're entering up are going to be in a foreign currency, which is flagged up on the supplier. We've now got the stage set in terms of our importing system. We have our parameters set up, we have our costing packets, we've recorded tariff codes against inventory items, we have overseas suppliers, we have now an order set up that we can actually start to receive documentation like commercial invoices and so forth for. Join me in the next video to see what's next. Thanks.